Minnesota. This is Christie Thompson with Christie Legal. I am a divorce and custody mediator and paralegal for Minnesota. I help people divorce and handle custody cases with less conflict, less cost, and in less time. I'm here with a panel of ladies who also help people when they are divorcing or separating, because the legal stuff is just the tip of the iceberg. So, ladies, if you could please introduce yourselves in alphabetical order, first names.
I'm Cathy Hietala. I'm a financial advisor, retirement planner. I help people through divorce, and I'm with the Terrio Group. Thank you.
Hi, my name is Heather Stumbo, and I'm a realtor on the Jason Gorman team with Keller Williams. And it is my job to help people, sell their home and move on to their next adventure.
Hi, I'm Tammy Wagner. I'm with Homeowners Financial Group. I'm a licensed mortgage professional, and I help people do the financing to either purchase a new home after a divorce or refinance the home that they want to keep.
Thanks, ladies. Thank you for helping me help my clients. And so just to give everybody just a little bit of information about what I do during the divorce process, you are going to divide the assets. That includes the house, the cars, the recreational vehicles, the financial accounts, both retirement and investment, the household goods. Maybe you guys have a rental property, a timeshare contract, everything. We're going to divide that as a totality, and each of you is going to walk away with about 50% of the value of all of those assets. Now, there are always exceptions to that 50-50 rule. And if that might apply to your situation, I'll make you aware of that. And then we're going to divide the debts. The debts are divided according to ability to pay. And what ability to pay means in regular people terms is income. So whoever has the higher income gets to pay more debts. And guess what, folks? It doesn't have anything to do with who created the debt. Because when you are married, you and that other person are one person financially and legally. So whatever the debts are, we're going to be dividing those according to the comparison of you folks' incomes. And if there are children, then we're going to handle custody issues. There are two types of custody. There's legal custody, and that is who is going to make decisions about the medical, dental, and mental health care of the children, who is going to make decisions about their education and their religion. 90% of the time, there is joint legal custody, meaning both parents have equal say. And then there is physical custody, and that is where the child physically is on the various days of the week and holidays and vacations and all those fun things. And so there are two types of physical custody. The first is joint. And, as you can imagine from the word, it means they both equally share the child. And each parent has approximately 50% of the parenting time. And there are lots of ways to do that parenting time schedule. And then the second is sole physical custody. And that is where the children spend more than half the time with one of the parents. There are a variety of reasons why each of these custody and parenting time schedules would be better for your situation. And we would talk about that in a free initial consultation and also during the mediations. So that's all the legal stuff. And now let's talk about all the other stuff. So let's start with if you need to sell your home as part of the divorce, or if one of you is keeping the current home and then one of you is buying another home. So Heather, please talk to us about buying and selling a house when you're going to divorce or separate. Thanks.
All right. If you are in a home and you're going through a divorce, it can be, it's a very scary thing. And it's hard to know what to do, because you have a lot of emotional attachments a lot of times to the home. It's where you've made a lot of memories, good and bad, I imagine. If you have kids, a lot of times it's the only home they know. So it's really important that you don't make a move too soon. Make sure that you have a plan so that you can keep your costs in line. Don't just automatically leave the home without knowing what's going to happen to it. And you want to figure out, is it in the kids' best interest, if you have kids, for you to keep it? Can you financially do that? So there's a lot of decisions that you have to make ahead of time. And when you're looking for an agent to help you make those decisions, look for someone that, is going to advocate for you, but for both of you, because you both have to work with the same person. So it's really important that the person helping you sell your house is not on really either side, but can openly communicate with both of you and help you work through the decisions on, like the terms of, like, what is the lowest offer that you'd be willing to accept? What is the timing on scheduling? Who's responsible for taking care of like cleaning and making sure everything is ready to be shown and all that. It's also important that you don't let your emotions get in the way. Understand that it really is, it's a business decision that you have to make so that you can get your divorce done and move on in your life. So don't rush anything. Make sure that your emotions are in check. You're dealing with your stress, and you can make a good, sound decision as to what you need to do, and that you understand that your agent is there to help you and find somebody that you can both work with and can help you make all of those important decisions that will get you moved forward.
Awesome. Thanks, Heather. Could you give us just a little bit of information about what real estate agents are doing now to prevent the spread of COVID-19?
Sure. Right now with COVID, there's a lot of things we can do. You can still go into homes, but we are staggering showings. We have things like everybody has to wear a mask. We have sanitizer in the homes. We do a lot of virtual tours, so people can come in, and like the agent will come in with the camera and walk around and explain the property to people, at least for a first showing. That's happening a lot. Just trying to make sure that we're sanitizing things, keeping people social distanced. It can be done pretty effectively.
Awesome. Thanks, Heather. And so could you talk a little bit about how houses are selling right now, and kind of like what they're selling for and any problems that might cause?
Right now our inventory is very, very low, and interest rates are still good. So it's a great time to sell your house right now, honestly, because things are selling so fast. For example, there's a house on our street that sold literally $400,000 over what it should have. Yeah, because they wanted to be in the school district. And I mean, it's just crazy. I'm like, how for that much money couldn't they find another house? So you really have to be strategic when you're looking for a new house, because things are selling super fast, especially when you're looking at the market like under 350, but even up to 450 or 5, they're going really fast sometimes. So you have to, when you're selling, be aware of that, and price the home correctly and have it in good condition so that it will get, you'll get a lot of interest and a lot of people coming through, and then it will sell almost instantly.
Great. Yeah, it's crazy right now. And I wanted people to be aware of that, so they're not quite as shocked when they meet with you and find out how quickly they need to act.
Yeah.
And part of acting quickly and getting a house is already being pre-qualified, right, Tammy?
That is true. Very true.
All right, so Tammy, please tell us about how you help people get mortgages, either to refi and to stay in the marital homestead, or to buy another house, either during or after the marriage.
Yeah, sure. The one thing that I just always like to stress is look for guidance before you finalize the divorce. I know, like Heather said, it's a very emotional time, but you got to make sure that you're setting yourself up for the future, and especially if there's children involved, you want to make sure that you're making all the right decisions. So do your homework ahead of time. If you're looking to put that home in your name, or if you want to sell it and buy another house, look to make sure that you've talked to a mortgage lender and know the qualifications. When there's 2 incomes or 1.5 or any extra income coming in, that might have been a lot easier, but you need to make sure that the guidelines and that we'll be able to count all of the income. We can count support that you receive if there's a 6-month history, but there is that little caveat out there that we need to see. That doesn't mean that the divorce decree has to be finalized, but if we're just seeing that income, we can count it. And that might be the breaking point. That might be your yes, you can qualify, or no, you can't. So do your homework at a time, make sure that you're knowledgeable, and that what you want to accomplish, it can happen, whether it's buying another house or just staying in the house that you have and taking over that.
And could you tell us what the interest rates are now, and like if you see anything happening with them, and what is happening when, like Heather said, houses are going for $20,000 to $100,000 more than they appraise it. So what happens then?
Yeah, I have heard these stories. Most of the homes that I'm seeing, I think maybe one was 30,000 over. If you're going for maximum financing, putting the minimum down, the home needs to appraise. So at least you have that peace of mind that you've got an appraisal that says, yes, this home is worth it. So I really haven't had that 100,000 over asking price come in. But the ones that I have seen come in have seemed to work out. If the home does not appraise for that, you've got to be prepared for one of two things. And that is the negotiating with the seller to see if they want to drop their price or meet you somewhere in between. But if they're meeting you somewhere in between, or they will not negotiate or lower their price, you've got to be prepared to cover it. So yeah, that's a whole different, it's possible. On my end, I think that I've been okay. My guess is, I have had a client that said that if appraisal doesn't come in, I'll make up the difference. So it's very unique situations. There's some very creative ways to try to get into a home. But know that as far as the loan goes, it does need to appraise at that, or you're going to have to make up the difference or move on to another house to look at.
Great. That's exactly what I wanted people to know. And could you also tell people, if they're wanting to get qualified for a mortgage, like what are the top 3 things that they should do?
Well, when you meet with me again, we'll talk about your income that you're receiving to make sure that along with your debt, that you're within a qualifying ratio. Credit piece, a strained relationship can, be a result of credit, not always, but if you need some help in that area, I've got some contacts. That doesn't cost my clients anything. So if they're looking to refinance or purchase, sometimes we can solve those within 24 hours. Sometimes it needs to be longer, but at least you've got an idea and you've got a plan in place, because I always tell everybody credit's kind of a monster. It can turn around, it can be negative with one simple thing very fast. And then sometimes it can take a little bit longer to recoup it. So not only would you meet with the lender to find out if your income qualifies, but to see what your credit is and see if there's some things that need to be worked on before you can get approved. Did I
Great.
answer all the questions you asked?
Yep, it sure did.
All right.
Yeah, because I mean, some people, they've never had a mortgage at all. And so they don't even, know like, what should I be doing now to get ready? Or maybe when they were married, their spouse handled everything financial. And so they, yes, they are on a mortgage, but they don't really know how they got on that mortgage, like what had to be done to get onto there.
And I hear a lot too, where people are like, well, when I purchased in 2000 or 2008, they never asked me for that, or 2015. And every time we face an economic situation, COVID is another thing. I think it's not as tight as it was before, but there's extra rules or regulations. It might be, one thing we had seen is that we had to provide that pay stub up until the day of closing to make sure that you still had that job. Whereas before it was, as long as you provided a pay stub and it was within 60 days of closing, you were fine. So the economy, the events happening, all have a factor on that. So another reason to be well educated.
Yeah, that's a good point. I had forgotten about that, how you have to prove your income like the day of the closing. Yeah. But that's a
It's
good
eased up a
smart
little
thing.
bit. It's eased up a little bit, some things have loosened. I'm seeing a little bit, there's a little bit of noted concern about second homes and investment properties. So if you do own a home, an investment property with somebody else, those they're trying to limit a little bit, just because they are worried about some of those losses if COVID has made a big impact on the mortgage market. So we've seen a little bit higher rates. The government is not willing to invest in those as much. So the sooner that you can get on that, I would recommend that to be great. And as far as rates go, I always tell everybody, if I had that crystal ball, I'd probably own an island in the Caribbean, but I don't. We do expect rates to climb a little bit here in 2021. The future is a little bit unknown. We actually could see a drop coming in 22 and 23. But again, nobody knows for sure exactly what's going to happen. As the stimulus money has been poured in, we're just a little concerned on if there's going to be some catch up on that. But that might also mean better rates. It's just hard to say. Inflation is going to be a big part of that. This year for sure, inflation is going to be a big part of. That's why we're thinking the rates are going to raise a little bit. We're talking probably still under 4, which are amazing. If you look historically, those are fantastic rates. But as Heather was saying, some of the prices have come up in order to get it because of the low inventory. So if your rate is going to be higher, you may qualify for a little bit less.
Yeah, that's a good point too. And how you're talking about, we don't have a crystal ball to talk about our finances. Well, I know somebody who sort of has a crystal ball, and that's Cathy. She helps people think about their financial situation during and after divorce. And so, Cathy, can you please talk to us about how you help people during the divorce process?
Yeah, well, first I want to thank everyone here for the wonderful information. Like Tammy said, it's about getting educated, and you all offer such a wealth of education. And I always tell people it doesn't cost anything to ask questions. I think we're all here to help you out first and foremost. And helping people get through divorce. The thing I see is that there's 2 main reasons people will stay in a marriage that they don't want to be in, are children and finances. And I don't want finances to be the reason you're staying in a marriage that you don't want. I can help sit down with you and look at what you have, what the potential, you could get through a divorce, to know that you can make it on your own. I can help you through knowing whether you can afford to stay in the house and or whether it might be a good idea to rent for a year or two or to buy another house and downsize. Those are the decisions I can sit down and really walk through a full financial plan and help you make those decisions.
Awesome. And could you tell the ladies about when they take part of their husband's retirement accounts, and how like taking part of an IRA is different than taking part of 401k, and what special fund laws and tax things happen when you are dividing a 401k during a divorce?
Yeah, and ironically, I'm actually doing that today. I worked on one called a quadro. It's a qualified domestic relations order. And if your spouse has a 401k and you decide that you can split that money, what you want to do is the court will put together this document called, we call it a quadro for short. It's a qualified domestic relations order. And with that, you can transfer funds from your soon-to-be ex-spouse's account into your own IRA. And what you want to do is you want to just transfer the funds from one account to the other. You don't want to pull the funds out for two reasons. One, if you're taxed, you're going to be taxed on it no matter what, if it's a qualified, unless it's a Roth. But if it's a 401k, a SEP, a simple, a traditional IRA, you're going to be taxed on that money. Two, if you're under 59 and a half, you're going to be penalized for taking it out early. And if it's a simple IRA, then you could have up to a 35% penalty. So there's things to watch out for. It's always best if you are splitting up a retirement asset like that to do it through the court order and just do a straight transfer from one account to the other. Then there's no taxation and no penalty. So it's very easy to do. It's all I need to do that is the divorce decree with the quadro in it and a signed piece of paper, and we can get it done.
And how long do people have to, after, they get the divorce decree, how long do they have before they need to put the money into their own account?
I don't believe that there's a time limit on that. I tell people they should do it as soon as possible, just because you don't want your ex having control of it. Plus, you want that on your account. If you want to get a mortgage, look at a new house, you want, the lenders to know that that's your money in your account and that's part of your assets. So, I mean, like I said, it's a piece of paper and it can be done within a week or two. And I always say, get it done as soon as possible.
All right. And so can you tell folks like what you do when you have a client and or a prospective client who is going through a divorce? Kind of like, what things do you go through with them and what's your goal? You did say your goal is to help them feel more comfortable about going through with the divorce, but kind of how do you do that?
Well, let's see if I can answer that question. My goal really is to let them know that they have enough money to make it on their own. My goal is to get you to that moment where you're like, I did it. And I can do that by helping you realize what you have in assets, in income. Let's look at any guaranteed income you have. And if you're going to have potential for child support or alimony, and where are you at? And then let's sit down and make a budget. And let's see, what's your budget if you stay in the house? What's your budget if you have this other option, if you move out? And let's compare those side by side and let's see what they look like. And we really lay out those plans so you can get a strong foundation and a strong knowledge of where you're at financially and show you how you're going to make it. It's not if, it's how you're going to make it.
Awesome. And so now we've talked about how we're going to help you through the divorce process. But that is just part one. So part two is after the divorce process, because the things that you guys have in your divorce decree need to be put into place, such as, maybe somebody needs to refinance the house. Maybe there needs to be a quadro written so that the retirement funds can be divided. Maybe titles on vehicles need to change. But there are a few things that are not in the court documents that we say, this must be done. And so Tammy, can you tell us how you help people? Maybe they weren't able to afford to get, the house, this time. Maybe their credit score wasn't good enough. Maybe they didn't have enough income. So how do you help people who would like to own a house, but they're not quite able to, they weren't able to get it yet?
Yeah, so I think I'd mentioned a little bit as far as the credit piece, we can get a plan put in place on that. And like I said, sometimes it's one day, sometimes it's a few months, and sometimes I think the longest I've worked with somebody was maybe 11 months, a year, almost a year. But it can happen. And I love the fact that people have a plan, they know what to do, instead of throwing all their money towards every debt that they have. It might not be in your best interest to do that. It might be in your best interest just to count on one thing versus 5 of the debts. If it's a matter of not being able to afford the home that you want, if it's you know that in this area that you want to be in, it's 250,000, 300,000, whatever it is. I like to look at the debt that's on there and figure out, well, what could we get rid of that'll get you there? If that's a solution. Sometimes people have no debt, sometimes they have lots of debt. But I like to look at those things with some loans, and it's also based on income. If you get down to 10 payments or less, we can exclude that. So if you've got a car payment that's $500 a month and you're at month 16 or 17, or more, whatever it might be, I could say, let's get this car payment. Again, there's a little caveat to that as far as your income is concerned too, but it could be that we get that down to 10 months, and by the time we close, we're at less than 10 months, and we can exclude that $500 payment. So you don't even have to have it paid off in full. But those are some of the things that I like to do. So I like to look at the largest payment, or the easiest way to get you to the level that you want to be at. So it's usually the credit is one piece, and then looking at debt to see how we can do that, or income. Sometimes people know that, I'm, going to get a promotion next year, or my income's going to go up. I get a lot of union workers that know that they're going to get a $2 an hour raise come January 1st. So we can look at that to see where you're at and see if that's going to get you where you want to be. Some people have part-time jobs, or they're in commission, they get bonuses. That type of variable income, we usually like a 2-year history on. So if someone's, been at a job for a year, a part-time job, it could be Avon, Mary Kay, whatever it might be. If they've been doing that, but maybe it's just not long enough history, then I'll give them that notice. So we can count this income once you reach this level. There's some exceptions we can get for a little bit shorter, but technically on variable income, it's 2 years. If there was a nurse and she took a part-time nursing job, she's already been in that career. So it's going to be a lot more flexible than somebody that's a nurse and started waitressing. But again, if we've got that time on her side, we can look at using that extra income.
Wow, I just learned 2 things. I just learned that the variable income, that you have to have it for at least 2 years. And then that sometimes if there's 10 months left on a certain debts, that you don't even have to count it. I totally didn't know that. So, I mean, I don't need a mortgage, but still good to know. I can tell other people.
There's some caveats to the debt piece of it. With certain loans, it's, your income would have to be like, that payment would have to be like 5% of your monthly income, things like that. So sometimes maybe that's not that 500, maybe it's $130 personal loan or student loan or something like that. So there's little caveats to it, but that is definitely some things that I look at in order to get people qualified for the home that they want.
Awesome. And Cathy, so when the divorce is over, how do you help people replan their financial future? And thanks.
Once a divorce is over and you're settled into where you want to be and you're ready to move on, it's still important to have a financial plan in place. It's still important to have a budget. And it doesn't mean that you're micromanaging or that you have to give up things that you love. It just means knowing where you're at. And if you want to have that special thing this time, what can we give up maybe down the road a little bit to make this special thing happen to still get you to your goals, whether that's paying for your kids' college or getting that new house and making sure that you're always putting at least some money away for retirement and showing you how we're going to get you through retirement. And life changes. You know, my favorite question is, oh, how are you doing? You know, what's new? People are like, oh, nothing. And then as you get to talking to them, they're like, oh, yeah, well, you know, I'm getting remarried and I got a new house. And, you know, life changes. So we need to keep up on that financial plan, just so you know where you're at and keep that budget. It's important. And I'm here to help you do that, to make it not stressful. Because I know for a lot of people, it's, like I say, for some people managing money is like me doing marketing. It just stresses me out. So I'm there to help you get through that and make it not stressful.
And that reminded me of an article that I read just yesterday on a psychology blog that when we're stressed out about money, we don't have as much ability to make good decisions because part of our brain is being used to worry. And so we just don't have as much brain capacity to put towards making good decisions. So part of making good decisions then is not being stressed. And the best way to not be stressed is to have knowledge, because knowledge is power. And that's what we want you ladies to have. We want you to have knowledge so you're less stressed, so you have more of your brain capacity to make great decisions. So there's the psychology lesson for today. So thanks, ladies, for your time tonight. I hope you got to go outside for a little while today in this beautiful kind of like first day of summer. And does anybody have any parting thoughts?
I don't think so.
All right.
Conversation.
Thanks, ladies. And we all do offer a free or no cost initial consultation. So if you have questions for us, our contact information will be in the post, and we would love to help you out. Thanks much.
Thanks.